While Macquarie is taking the opportunity to invest in China, the IMF says it's the Chinese consumer that will be critical to the global recovery. The International Monetary Fund is looking for a rebalancing of the Chinese economy away from investment to consumption. The IMF says that would create a more sustainable growth path. Andrew Robertson reports.
The Reserve Bank has raised its economic growth forecast, Treasury is doing the same, and now the Westpac Melbourne Institute leading index of economic activity is also continuing to improve.
The factors that are improving the growth outlook are firstly the strong run-up in the share market. That's indicating that people are getting more confident. Secondly, a much better input from the labour market numbers. They're improving a lot. And thirdly, the housing approval numbers have improved.
The leading index looks 6 to 9 months ahead and is suggesting the Australian economy will grow by about 2% next year if confidence continues to rise, something which could wane once the Reserve Bank starts raising interest rates.
The Reserve Bank doesn't want to see all the good work undone in a quick period of time by raising interest rates too quickly, but by the same token, they don't want households to believe that they should be adjusting their behaviour to the assumption that the Reserve Bank cash rate stays at 3% indefinitely.
As the Australian recovery becomes increasingly well documented, the International Monetary Fund believes the global economy is also on the way back. But according to the IMF's chief economist, that recovery will be slow. Olivier Blanchard says the global financial crisis has left deep scars which will affect both supply and demand for many years to come. For the recovery to be sustained, Mr Blanchard believes consumers in high-saving Asian nations, and China in particular, need to loosen their purse strings.
Two things need to happen there. The households need to become more confident about the existence of the welfare state so they don't save as much out of their incomes. And secondly, the distribution between profits and household incomes needs to move further in favour of household incomes. If the Chinese authorities can do both of those things, then they will achieve a more sustainable growth in domestic spending.
Another key factor in the global economic recovery will be the health of the financial sector, which caused the crisis in the first place. Reserve Bank Assistant Governor Malcolm Eadie says it's important governments resist the temptation to punish the banks.
More demanding regulation of banks' capital and liquidity and risk-taking will make the core of the system safer, but it will also add to banks' cost of doing business,
which will increase the cost of credit and stifle economic recovery.